Investors, meantime, are continuing to show pandemic beneficiaries love. Names like Home Depot, Target, trading near all-time highs. In fact, they set all-time highs in trading yesterday. These were stocks across the board. It was pretty impressive to watch. You had Home Depot, Lowe's, Target. You had the home builders like D.R. Horton, Lennar, and Pulte. And joining us right now to talk about this is Stephanie Link. She's chief strategist at Hightower. She's also a CNBC contributor. And Stephanie, I was watching the list of the not just 52-week highs yesterday. These are all-time highs going back to the IPOs of these companies, going back decades and decades for many of them. You had Darden, you had AutoZone, you had CarMax, you had O'Reilly Auto, you had Snap-on, you had Otis, you had Whirlpool. All of those names, a lot of them that have done so well during the pandemic, continuing to push higher to all-time highs. What do you think of this as an investor, and which way are you trading it?
Good morning, Becky. It's great to see you. Look, we've talked about housing being the bright spot of the economy, right? People are migrating from the cities. They're going to the suburbs. We're hearing from companies like D.R. Horton and Pulte, as you mentioned, that millennials are now starting to buy because of the low rates, because of the liquidity, because of extra checks in their pockets, the savings rate at 20.5%. So this is a theme that isn't going away. I do watch the mortgage application numbers. They've been coming down a little bit. New home sales last month fell 18%. Really tough compares, but still very, very healthy. And the whole point of housing is that there's only 2 months worth of supply out there. So that's the reason. We just have to watch the affordability part of it. But to your point of, Home Depot, they're just crushing it, right? And this HD Supply acquisition that they did, that's the MRO division sector in the economy. It's a $51 billion total addressable market. So the pro is doing well. The consumer is doing well. They're doing great in terms of operating leverage. Target, Brian Cornell has just done an absolutely terrific job, and they're taking market share. Remember, we talked back in February, I think, that the comps were up 30% in January, up 20% in February. So they're clearly taking share. And on top of that, he's doing a great job on the margin front. So I actually think the ones I actually own Stanley Black & Decker and PPG. Maybe they're just not, they're kind of off the beaten path, if you will. But I think you can continue to play this theme, and there's a lot of ways to do it.
That's my question, Stephanie. For the ones, we can talk more about PPG and Stanley Black & Decker in just a moment, but if you talk about those big name companies that have done so well, they're not off the beaten path. They have done incredibly well for a very long time on the idea that there was no place else to go. You think that trend continues, that these are not things that are going to say, okay, vaccines are here, COVID gets knocked down, we're back out and we're changing our patterns. You think some of these things are kind of set into long-term things that will last well beyond the pandemic?
I do. If you look at the purchase index, it's up 4 weeks in a row. And that is telling you that jobs are more important than rates, right? And so as jobs continue to improve, then people will start to spend more, and they are spending on their homes. And so these companies at the same time are doing just a terrific job in terms of efficiencies and market share gains and spending in the right places, right? Look at what Brian Cornell has done at Target. He totally has changed in terms of what they're offering to the consumer. And I have always said, if you can offer what the consumer wants, the consumer is going to buy, right? So I do think these trends are in place. We do have tough comparisons. We've got to watch valuations always. That's why I say we can, kind of find some of the names that maybe haven't participated as well. But I still think these are core holdings that you want to own, and they're just called compounders.
And then when it comes to PPG and Stanley Black & Decker, these are just derivative plays that you kind of look off of this, things that people haven't necessarily figured out yet?
Yeah, Stanley Black & Decker was a terrible performer last year. I own it, so it was a terrible performer. It kind of hurt. But if you believe tools and storage continues to be strong, 30% of tools and storage at Stanley Black & Decker is Home Depot and Lowe's. So you're going to get the exposure there, but you also get exposure on the industrial side and on the energy side. So I have always said that Stanley Black & Decker is a stay-at-home and actually a go-back-to-work kind of a name. And it's just the valuation is just just really very, very cheap. PPG, I mean, they're hitting it on all cylinders, right? I mean, it's industrial, it's coatings, it's aerospace. They did 2 acquisitions. They've completed 2 acquisitions already year to date. They have another 2 that they're about to close, and that'll be synergistic. And I always kind of like a special situation story like that company. So I like those 2 names, but I do like these other ones as well. And I think you can own a basket, if you will.
Shepard Smith here. Thanks for watching CNBC on YouTube.